I'm extremely pleased being here today to host this discussion on market fragmentation. I mean, throughout the morning, we have already heard a number of references to the importance of this topic. Deputy Prime Minister Aso referred to it as one of the key issues in the G20 agenda and something that is going to be widely discussed over the weekend when the finance ministers and central bank governors will be meeting. Well, I'm sure in this audience today there is complete wide consensus about the importance of this issue and the challenging nature of it. Perhaps 1 year ago, it was not still a central part of the agenda of the FSB and the G20. And that is why I think we are extremely privileged today to have Himino-san with us, because your work and your leadership in this topic has been instrumental in placing that discussion at the very center of the agenda of the G20 and the FSB. Many of you may have seen the report that the FSB released earlier this week, a couple of days ago. And I'd like to start there, Ryoso, with a description of the process for this report to come about, the kind of issues that were discussed while producing that report, but importantly, the findings and the next steps in addressing the worrying nature of market fragmentation.
Thank you, Andres. Japan, as the 2019 G20 presidency, has started to propose within global regulatory community to put market fragmentation issue as a priority in 2019 around last autumn because we thought there are several reasons for that, because we thought there are some growing anti-globalization sentiments in various parts of the world, and also the post-crisis regulatory reform attained a lot, but the volume and complexity of regulation expanded significantly, and then slight difference in implementation cross-border is causing lots of specific issues. And also, there seems to be some gap between the reality of global banking, the reality of level of trust between national authorities, and the kind of party line of resolution framework. And also we saw some window of opportunity in attaining something in avoiding derivatives market fragmentation, given several important jurisdictions change in their policies. So we started to advocate that last autumn. Many people advised us, this is a minefield, don't try to do that. But also Andres, others, IIF people encouraged us, and there are several other regulators encouraged us. So we moved forward, and it was put as a G20 priority for this year, and both FSB and IOSCO started to work on it. Last Tuesday, the two reports, FSB and IOSCO reports, are published, and both of them are sent to G20 ministers and governors who are meeting in Fukuoka on Saturday and Sunday this week. Then the question is, what is in the report? Jun led the IOSCO work, so I would focus on FSB report. It first do some conceptual clarification, then move to a stock take of the status quo, then explore potential solutions, and then describe next steps. And in the conceptual part, it argues there are intended fragmentation and unintended fragmentation. There can be harmful fragmentation, non-harmful fragmentation, or even beneficial fragmentation, because national priorities differ from country to country, developmental stage differ from country to country. So we are not aiming or advocating harmonizing each and every regulation across the globe, but focusing on harmful form of fragmentation and proposed to do something. And the stocktake part, IIF and your member institutions and also other industry associations contributed a lot in giving us specific examples and analysis. It discusses derivatives market fragmentation. It discusses ring fencing of capital and liquidity. It discusses cross-border information flow issues. For example, national authorities impose almost the same but slightly different data reporting requirements and that kind of issue. Those issues are analyzed. Then we propose several potential ways to improve mechanisms and approaches of regulation and supervision to mainly alleviate the future risk of fragmentation. Then in the end, the report proposed 4 areas for next steps. The first one is derivatives and securities market difference, and the FSB deferred that to IOSCO. And the second area is ring fencing and the pre-positioning of capital and liquidity. Many people thought this is the highest hanging fruit and we wouldn't be able to put it in the report, but in the end, it was included in the next step. The third area is a rather broad catch-all area. It discusses cross-border cooperation and improvement in approaches and mechanisms. And the fourth step proposes in our assessment of effects of regulation, we take into account fragmentation elements. So to be candid, this is much more than I expected when we started proposing this exercise last autumn. And I think we have done as much as we can do within 6 months of the first half of this year. And I expected a cumulative watering down of the report at each time of the member coordination process. Yeah. But each time the report got stronger and stronger. And it indicates FSB membership's growing attention and awareness on the importance of the issues. So I think it has been a good step, but I would say this is only the end of the beginning. The real progress should start from now, defining more specific steps, and I look forward to getting continued support and input from IIF and member organizations.
Thank you, Russell. And let me pick up on that with Deborah. Very often this is described as a problem of just additional cost and compliance burden for banks, having misaligned regulations across the world. Is it much more than that? Why is this something that we should all be concerned about? And having seen the report, what's sort of the reaction from JP Morgan and industry perspective?
So first of all, I'd really like to commend the FSB and IOSCO for the publication of these reports. As you noted, I think the reports, in a sense, went beyond expectations of where this issue could be dealt with in the global regulatory community. And your leadership in this aspect has been instrumental to the accomplishment of this objective. I think the most important achievement here is we've now made market fragmentation a part of the conversation. There's enough embedded in these reports that this is not a one-time exercise. This will actually be part of the dialogue going forward. And I think there's a number of concrete suggestions in the reports that will actually make that happen. I think the reports themselves, because they're quite substantive, and they show actual examples of where market fragmentation is impacting things other than just costs for firms. I think there were some skeptics out there that thought that market fragmentation was just about increased costs for firms and firms were complaining about burden. But I think the reports show that there are impacts on cross-border capital flows, allocation of capital and liquidity by firms, functioning markets, economic growth, and ultimately financial stability. So I think that going forward, the questions about is this just about cost should be dismissed at this point. And it's really the substance of the reports that accomplishes that. I think that, as Axel Weber noted this morning, some of these issues may actually get worse before they get better. And I think Tim Adams noted that many of the G20 objectives take a long time to accomplish. This may be one of them, and certain parts of the report may take a long time to deal with in the regulatory community. But I think that working together with industry to continue to identify issues that arise due to market fragmentation, this provides the platform and the work going forward where we'll be able to engage in a dialogue on these topics. So I will say that the report in particular provides a definition of market fragmentation and provides the types of issues that we should look for to identify where this is occurring. I think that in and of itself is quite helpful. The fact that you were able to step into the minefield, as you describe it, and actually deal with some of the more controversial topics around ring fencing, for example, sets the stage to start to work collectively to solve these issues and get the balance right. This is one area that needs attention and needs focus because it ultimately could impact financial stability. The misallocation risk of trapped capital and liquidity is something that we need to deal with, and this will start that dialogue in an organized fashion, and we look forward to the workshop that you will be holding to discuss this issue. One of the other areas that there's been a lot of discussion around, and this could perhaps provide a better framework to deal with this, is data harmonization and data standardization. Once again, post-crisis reform, capital, liquidity, resolution, all the headline issues, but data harmonization is really just as important as many of those issues. And I think that the regulatory community and the industry should be aligned in our focus on solving these problems around data harmonization. Because at the end of the day, for risk monitoring purposes and in the event of stress, we need usable, comparable data across our data sets. And this is a critical area of importance to make progress in. So once again, the report deals with this in a very concrete and actionable way. So lastly, I'll just say that we really applaud the fact that there are concrete suggestions for how to take these issues forward. I think the industry would look forward to engaging with you on those objectives.
Yeah, and on the data issues, we've been also discussing throughout the day data localization and how some restrictions in the free flow of data are causing problems also on the supervisory and regulatory side. So we can pick up on that later. Toshio, let me go to you because the Basel Committee plays a very important role here. I mean, a number of the big areas thematically on which there might be concerns around fragmentation relate to capital liquidity, issues on which the Basel Committee is instrumental in setting those global standards. People talk about, is fragmentation deriving from the way those standards, global standards, get then applied and implemented at the local level, the differences and the frictions. What is the Basel Committee doing about that consistency, and is there a way to promote greater consistency globally?
Yeah, thank you very much, Andres. So from the Basel Committee perspective, I would say market fragmentation is also very important for us. Currently, the Basel Committee work program, we have 4 components. The first one is implementation of post-crisis reforms. The second one is the evaluation of those reforms. The third is promoting effective supervision. And the fourth one is targeted policy initiatives. And I would say all four components of the Basel Committee work is more or less related to addressing the market fragmentation issue. But given the limited time, allow me to maybe say a few words from the implementation angle, which I think is the most relevant at this juncture. Yeah. So as you know, the Basel framework, this is a global minimum standard applicable to internationally active banks. And the global minimum standard is developed based on international coordination, prevents clarity to the prudential standards, prevent a race to the bottom, and supports a level playing field, and also, of course, reduce market fragmentation. And the fact that the Basel Committee and the governors and heads of supervision, GHOS, were able to agree on the Basel III final package in December 2017, I think this is a powerful message we sent that, based on international coordination, we were able to agree on this whole package applicable to internationally active banks. And that, I think, was a powerful message that would really reduce the market fragmentation concerns, I think. I went to Basel 2 years ago, and I still remember that was before the final agreement. There were a lot of concerns that the whole Basel framework may collapse. There were serious concerns at that time, but I think people put a lot of effort in making a deal, and I think that is the most effective way to address market fragmentation. So now the focus is really on the full, timely, and consistent implementation of these global minimum standards. And of course, now the responsibility has shifted to the national jurisdictions. They need to implement or introduce the internationally agreed standards in their domestic rules. Currently, there are some standards that have not been implemented yet. There's some delay. If you look, for example, the NSFR, the net stable funding ratio, the large exposure standards, these have not been fully implemented across all jurisdictions. And in addition to that, in the pipeline, we have this big package starting from 2022, the whole Basel III framework and the market risk framework, which was agreed in January. So there's a lot to come, and we need to really focus on implementing these in a full, timely, consistent way, which is, by the way, a G20 commitment. Yeah, so what can the Basel Committee actually do? How can the Basel Committee support the national jurisdictions in facilitating the domestic implementation? The most effective tool we can provide, and we are actually providing, is we call it the RCAP, the Regulatory Consistency Assessment Program. It's sort of a peer review program, and we introduced this in 2012. And by the way, Himino-san was very instrumental in developing this RCAP framework. He was then the chair of the Supervision and Implementation Group. And so thanks to him, we have this effective tool now. And I'll just highlight some of the characteristics of this framework. So what we actually do is we set up a team comprised of experts from member jurisdictions. They go into each member jurisdictions. They actually assess the domestic rules, compare it with international rules, and if there's any material deviations or anything, that's sort of raised as a finding. And scores are assigned to each component, and these are all set out, developed into a report, which is made public. So what actually happens is that before the report is published, a lot of the member jurisdictions actually fix or rectify the deviations. So when the report is actually published, it's pretty, I think, minimized in terms of the deviations.
The gap has narrowed.
Exactly. So I think that's good progress, I think. Of course, we can't sort of get rid of all the deviations in reality, but I think we're making good progress on that. Currently, we're devoting a lot of resource in assessing the NSFR and the large exposure standards, and this will go on until 2022, and from 2021, and then from 2022, of course, the Basel III package and the market risk framework will start to be effective. So there's a lot of work, and we'll really focus on ensuring full, timely, and consistent implementation from the RCAP perspective.
So
Yeah.
in a way, to be continuous, right? I mean,
Exactly.
The number of key decisions in the
Exactly.
European process, in the US,
Exactly.
the banking agencies.
Oh, yeah. All member jurisdictions, and really the policy work is over.
Right.
So the focus is real shifting into implementation and other stuff. So
Okay.
that would be our key focus for the next few years.
Right,
Yeah.
right. So let me switch to and ask June. When we started discussing market fragmentation, one of the main set of examples were describing the securities and derivatives area. In many cases, extraterritoriality was an issue, jurisdictions establishing regulations that had extraterritorial effects, and most of them, again, were in the derivatives side. So IOSCO is looking at these issues. You worked in 2015, did a report on greater cooperation tools. Now this new report, tell us about the findings and especially what can IOSCO do to address this problem?
Yeah, sure. Well, thank you, Andre. Well, I just like to touch upon the IOSCO's work. Actually, we published our paper. It's called on the market fragmentation and cross-border regulation issue this Tuesday. And well, the Andre said that this report is follows up on our 2015 report, which describes we call the toolkits for regulatory approaches in the cross-border regulation, something like a national treatment or recognition or passporting. And then this time, our report focusing on the market fragmentation that arises as unintended consequences from a regulation in the wholesale securities and derivatives markets issue. Then this report also provides several examples which IOSCO members considered significant and also the potentially harmful to the oversight and the regulation of the securities markets. And then building on the 2015 report, we examined the progress made by the IOSCO members since 2015, especially with respect to how we use the kind of difference. The difference, what I mean here is a kind of reliance on the one another's regulatory regimes in pursuing the cross-border regulation. Well, such as the passporting or substituted compliance or recognition or equivalence, so on and so forth. We can say that since 2015, of course, regulators have been increasingly aware of the risks of the unintended consequences of the regulatory-driven market fragmentation. And then, but at the same time, we note that more and more cooperation are coming in to mitigate these kind of risks. In that regard, we saw that the use of difference has been on the increase more and more. Then we see that the difference is a powerful way to mitigate any kind of harmful market fragmentation issue. Nevertheless, we see several challenges remain. Then we identified some potential the measures which could be further pursued within IOSCO. Basically, there are three areas. The first area is on the how to foster mutual understanding of one another's regime. IOSCO, we have the 4 regional committees that consisting of the regional members. One of the areas which we have been doing, for example, is that the Asia Pacific Regional Committee, which I chair right now, is set up some of a forum with EU authorities, notably European Commission and ESMA, to try to discuss any issues, particularly on the equivalence assessment type of issues, to enhance the mutual understanding, because that would be very, very important for the assessee jurisdictions. So that's kind of the regional, making a greater use of IOSCO's regional committee is still underway. And also, we trying to create a mechanism where the industry groups, we have an industry group called the Affiliate Members Consultative Group, consisting of the SROs and then stock exchange and others, to provide the annual input to the IOSCO on any issues which they think are relevant for the regulator to consider. kind of manual consultation process may be created. So that is the first area. The second area is that to further strengthen the existing regulatory and supervisory cooperation. Well, we have a setting place like global colleges or supervisory cooperative MOUs. But what we are trying to do right now is to establish, we call the information repository on the supervisory cooperation MOUs or recognition decisions, so that we could enhance more transparency, not only to the regulators, but also the industry. That's the second element of the work to be done. And the third one is on the process for difference. That is not so easy work. But first we could do is try to find out whether there are any good or sound practices which can be found with respect to the different tools. Well, for example, in the light of SSC jurisdictions, it has been pointed, for example, that the assessment process or difference process sometimes may lack the clarity, and also it is time-consuming, and also it's not so efficient. So the issue of the clarity or how to make the difference process more efficient could be the issues which we can explore. Well, but having said that, especially for the last item on the difference, the IOSC board will need to scope the exact the mandate of what we could do about this. Then IOSC board at its next meeting in October, we are trying to discuss the further and decide what to do as a next step. Then I just would like to say that they also mentioned about the FSB report, and the IOSCO report is basically on the securities and derivative side. But I would say that these two reports are complementary and consistent. So these reports basically go hand in hand together to create a better world to mitigating risk for the market fragmentation.
Let me then perhaps ask Yuji to tell us, I mean, Nomura extremely active in these markets and probably living, very personally the challenges of fragmentation. Tell us, what are the main challenges and what do you see as sort of opportunities to address them?
Well, yeah, thank you very much. Well, first of all, I would like to say that I am quite pleased to be sitting in this panel. And right after the release of two very important and long-awaited reports from FSB and IOSCO. And these reports actually are addressing a number of issues in a more pragmatic way. And because we have been waiting for that quite some time, and the market fragmentation has been a concern of the industries, especially capital and the derivative markets. For example, non-CCP margin requirement rule, which has been implemented since 2016.
Right.
So there were a number of discussions when actually that rule was about to implement it. And for example, actually there are quite a few examples of market fragmentation, possible source of market fragmentations, like. Some are more technical, like the settlement cycle of a margin payment, and some jurisdictions regular cycle is a T+1, but other jurisdictions are T+2. So how can I manage that kind of discrepancies? Potentially would lead to the market fragmentations. And eligible collaterals may differ from one market to another, and interfere, the requirement of a margin settlement. So these are the piece by piece kind of the headache for industry, especially those who operate on a global basis. And well, It's true that it's been somehow it's been streamlined, sorted out one by one. But probably the pace that that kind of fixing has been implemented was much slower than we should have expected. So at this time, well, we are quite pleased to see these reports, which is a quite substantial improvement of a stance of global policymakers, and also that will set very forward-looking, very proactive posture of our global policy makers.
Yeah. Ryosu, I was quite intrigued when you were describing the issue of ring fencing and prepositioning as the sort of highest hanging fruit. And that you were maybe even skeptical that that was going to be addressed in the report. Can you give us a little bit of insights as to how those discussions took place within the FSB? And is there a real opportunity to address this issue? I mean, we're talking about measures that are adopted by individual jurisdictions to ensure the stability in their own markets and not being dependent on decisions from other regulators. So what was the debate within the FSB, and how much progress can we achieve there?
Right. Deborah cited the example of data reporting requirements. And maybe that is a typical example of unintended fragmentation. Well, you don't intend to differentiate the definition of similar items from country to country, but if you write down the reporting requirements country by country, you end up with that. But ring fencing issue is a typical example of intended fragmentation. And maybe the harm might be also biggest among the market fragmentation issues. Maybe it would have a biggest impact on future financial stability. The question is, it roots in the famous quote from Marvin King, banks are global in life and national in death. And depending on which start you are thinking, if you start your thinking from death, you tend to result in more multiple entry type of thinking and ring fencing. And if you start from life, maybe the need to maintain global banking would be emphasized. And there is no simple solutions, but I'm not sure if the current situation is the optimum things, or we are fully well prepared for the next round of crisis. So the description in the report is rather cautious. The first step is described as understanding what national authorities are doing and why. And the first step would be the workshop. And after understanding why we are doing this, how much we can go, I'm at the moment not prepared to predict.
So let me ask Deborah, staying on this topic. I mean, JP Morgan is present in many, many jurisdictions around the world. You have these discussions about how you operate and how you should be set up and how much capital you should have there and your liquidity, etc. Should we just give up and understand that this is just the way things are going to operate going forward, or is there a way that we can promote greater trust among cross-border supervisors?
Well, I think it's more a concept of trust but verify. And
right. Yeah.
In that sense, I think it comes back to some statements that Vice Chair Quarles has made, Chair of the FSB, about getting the balance right. And I do think there could be much more work on getting the balance right. There's been a proliferation of these requirements, and we're seeing it come up in the context of the world of branching now as well. And so I think it is a time where perhaps there could be more discussion around getting that balance right. I think that it would be naive to think that host jurisdictions are not going to want some type of protection. But there's been so much progress made around resolution and SPOE that was mentioned this morning,
Right.
that to discard that and move to a world where it's each host for themselves, in a sense, really ignores all the progress that has been made and can actually, as many in the industry have described, creates additional risks, as I mentioned before, regarding misallocation of where capital and liquidity is located in times of stress. And I think that's the important point, is that we don't want to solve the host issue by creating other issues that could have impacts on financial stability. So I think it's important, not just from a JP Morgan perspective, but from a global financial stability perspective, to continue to try to make progress in this. And I think one thing the report mentions is the work of the crisis management groups, and I think that's probably one area where more attention should be paid, because if you look at the documentation that's been issued by the FSB on crisis management groups, there should be more fulsome discussions around the distribution, for example, of internal TLAC within those groups. I don't think we've really seen that fulsome discussion taking place, in the sense that each host jurisdiction has just come out with its own requirements regarding the implementation of internal TLAC and the like. So that's one area I think could be addressed, for example, in the workshop. So there are some concrete objectives and forward-looking discussions that could be held around that topic.
So to leverage those groups and have those discussions among the interested supervisors and get an agreement of, availability of resources and how to plan for situations of crisis. Yeah. Toshio, from a Basel Committee perspective, we talk about the traditional areas of capital, liquidity, etc. There might be other sources of inconsistency, fragmentation, etc. Cyber, for example. Is the Basel Committee also looking at those issues? And
Yes.
what can you do about it?
Yeah, good. Thank you very much. That's a good point. Since Deborah touched upon the crisis management group,
Yes.
maybe I'll just briefly talk about the supervisory colleges,
Please.
which is the other part.
Yeah.
And the Basel Committee has a dedicated working group focusing on supervisory colleges, and we have principles for effective supervisory colleges that was published around 2014. And since then we've produced 2 progress reports, and I think there has been good progress. There's been more enhanced information sharing, and I think now we're moving into the stage of doing some coordinated risk assessment, I think, at the supervisory college level. So I think progress is made. And currently we're also developing another progress report, and later this year we plan to have a workshop on supervisory colleges, how the principles are implemented. And as you just mentioned, Andres, not just when we talk about the agenda of the supervisory colleges, the traditional capital liquidity, but also these new emerging issues or risks like fintech, cyber. And we're sort of trying to think how the supervisory colleges can actually talk about these new topics. I think that's a new trend, and I think we're very interested in that also. And going back to your point on cyber, yes, we also have a dedicated working group on cyber. I think it was in December, late last year, the committee published a report on the range of practices on how jurisdictions are approaching the operational resilience issue.
Yeah.
And we found out there's so many different approaches. So it's sort of, I won't say fragmented, but I think there's a lot of different approaches. So now the focus is on just to facilitate some convergence, I think. in line with what we're just talking now. We're currently working on updating principles for assessing these operational resilience. We have some existing Basel Committee principles, for example, the e-banking or outsourcing. So we're reviewing all these existing principles and trying to sort of combine it into one new set of principles focusing on operational resilience. And also we are doing some work on how we can actually assess the level of operational resilience. I think it's very challenging. We did a stock take and we found out, I think there are like 400 different approaches out there. So again, based on that stock take, we're trying to sort of converge some of the assessment methodologies, and we hope we can sort of publish something in the near future. Yeah.
So in the same line of new emerging issues that might cause fragmentation, let me ask June about, I noticed the IOSCO report looked as to areas of potential new sources of fragmentation. I think you were mentioning Brexit clearly as one of them, benchmarks replacement, another one, and the kind of issues that Toshio was mentioning in terms of the digital transformation, crypto assets, etc.
Yeah.
Tell us about a little bit of that discussion within IOSCO and what can be done about those new areas.
Yeah, thank you. Well, apparently Brexit is a big issue.
Yeah.
Then, of course, IOSCO itself may not be in a position to solve the Brexit issue, but apparently Brexit itself is a kind of potential issues to impact on the market fragmentation issue. So, well, of course, the UK members, UK is a member of the IOSCO, so we are kind of sharing information through the UK members. So that's one point. And then the second one, you mentioned about the benchmark regulation. Here we are talking about the EU benchmark regulation issue. Well, that regulation basically they identified the three-way forward, like something like equivalence or and then recognition and endorsement type of issue. It's a bit complicated, so that's why they extended the deadline 2 years more. I think it's something like 2022 something. So we have still a little time, but there's some of the jurisdiction which might be impacted on the benchmark regulation. We need to talk to the EU side. So that is another potential issue. Then the third one you mentioned about the emerging issue like crypto assets or cyber issue. Crypto assets, there are some jurisdictions which put in place some regulation, but the regulation or supervision quite vary depending on the jurisdiction. So apparently there will be some risk of the market fragmentation. But again, IOSCO's crypto assets is a quite new issue. When we talk about the securities, in some jurisdictions, the crypto assets may be classified as securities, but others are not. So
that's a live debate in the US with the SEC.
And the cyber issues, well, there might be some difference in the reporting format on the cyber issue or a cyber drill to the authorities. We may have to do something on this, but it is still emerging issue to be discussed further.
Okay. Juji, data has been mentioned several times. Data localization as a source of fragmentation as well. How important is that issue for a bank like Nomura? Do those issues affect you directly?
Well, yes. Well, I just want to touch upon a couple of things. And well, first of all, new emerging, the source of fragmentation. One is, of course, touched upon by a IOSCO report, the Brexit. We are quite concerned about the Brexit because, how that will play out in the context of a mutual recognition regime, especially the regulation in EU and the UK, even after Brexit, will be quite similar. And so how they...
Remind us, how are you set up in Europe to address?
Right, yes. Well, actually, it has become, I must say that it has become quite political. And a number of European cities try to promote these cities as a financial center. So there's a bit of a, the competitive nature between UK and the EU. That that has complicated the situation in a significant way. So going forward, how EU regulators and the UK regulators deal with the recognition scheme or the regime, that is potentially a concern for us. And the other source of the market fragmentation that we are quite worried about is obviously benchmark, IBOR replacement. And because it's, well, in the past, when LIBOR was kind of the benchmark for interest rate, and it was quite standardized. And the major currencies traded in London. However, after the LIBOR abolishment, for example, dollar market may be dominated in New York and the yen market in Tokyo, GBP in London and the Eurozone. So then, how they design the alternative benchmark, which may be different from one market to another. But there are a number of cross-border transactions, cross-currency transactions, and also across different products, not only derivative, but loan products or the bond products. There may be a different benchmark for different products. So that may be a significant source of market fragmentations, and the market might be a much smaller than the current situation. And so, well, the key is how both public sector and the private sector can coordinate ourselves on a global basis. How we can make these benchmarks in different currencies, different products, more consistent to each other. So that we shouldn't create so many bases across different products and currencies. Otherwise, definitely market liquidity will suffer.
I'm going to use a couple of the questions from the audience, and maybe Ryoso or whoever else wants to address them. But the one issue about sustainability hasn't been mentioned so far. But I think Tim Adams this morning was talking about the different shades of green, right? What's green here in Japan might be different in Europe, and might be different in the US. Can we do something about this kind of fragmentation, different approaches to sustainability? Is that an area where harmonization can be promoted? Let me go with you, Rosa.
Well, one example is task force on climate-related disclosure report. And the first full-year implementation report would be submitted by TCFD to G20 ministers and governors in Fukuoka. And it provides a common platform for kind of sustainability finance. And Japan is stepping up its effort. And now Japan has the largest supporting corporations, listed companies in the world, more than 160 subscribing to TCFD recommendations. And Japan FSA and METI jointly supported in private sector initiative in Japan to kind of compare notes among issuers and investors called TCFD Consortium, launched a few weeks ago. And the Japan FSA also recently nominated our Chief Sustainability Finance Officer. So, well, maybe our efforts may not be fully synchronized with European effort, but we've been trying to do a lot, and we are very keen to have a discussion with other regulators in the world.
Another a bit challenging question from the audience. Should banks accept that this is the end of the branching model and that subsidiaries are the only way forward? Deborah, how do you react to that?
I'd say no. I think we have to have some dialogue around that issue, understand what the real concerns are. I think there are clearly a lot of benefits to branching, and there just needs to be more dialogue around the topic, and not just heading in a direction of more
Forced
yeah.
subsidiarization.
Yeah. So I would say no,
That was
in short
well,
order.
well, and I think all the IIF members would strongly agree with you on that. I see we have run out of time. Let me use this opportunity again to really commend the work that Ryoso in particular has led with his colleagues in the JFSA, June, of course, in putting this topic very centrally in the agenda going forward. I expect it to be part of the G20 presidency under the Saudi presidency, but definitely a topic on which perhaps in 6 months and then 1 year we can get together again and assess how much progress we are achieving. So thank you again, and let me commend you for your work, Ryoso, Jun, and everyone. Please join me in thanking our panelists.